actually have like 10 more questions to go. So given that, what's actually driving the interest of the investors in the 10-year right now? Like what market dynamics are shaping this attention, do you think? So it is often described as the most liquid and actively traded government bond in the world. Why is that? Could you explain why that range was chosen and how the ICE US Treasury 7 to 10-year bond index is constructed?
So when we have a rules-based index, if you make the maturity bands too tight,
안녕하세요. ACE ETF 염정인입니다. 금리가 오른다 내린다 동결이다 매일 뉴스에서 접하시죠. 그중에서도 미국 10년물 국채 금리는 전 세계 금융시장에서 장기 금리의 방향을 보여주는 핵심 지표로 여겨집니다. 실제로 미국 10년물 국채에 투자하고 있는 대표 ETF는 수십조 원 규모로 운용되고 있고 이 ETF가 추정하는 기초지수는 ICE에서 설계하고 운용하고 있습니다. 그래서 오늘은 ICE에서 실제로 이 지수와 상품 구조를 설계하고 운용하고 있는 전문가분을 모시고 왜 지금 10년물이 주목받고 있는지 그리고 어떻게 이 같은 전략을 구사할 수 있는지 이런 것들을 조금 직접 들어보는 시간을 준비했습니다. So would you mind starting off by telling us a bit about yourself and what you do at ICE?
Yeah, no, thank you for having me. My name is Varun Pawar. I'm the Chief Product Officer for ICE's Fixed Income and Data Services. I've been at ICE for roughly about 6 years now, and I oversee a big part of our portfolio of data products, one of which includes our index business, which is quite a large business for ICE.
Okay, great. So let's start with the basic for many of the retail clients here. So 10-year US Treasury, it seems to be a pretty big deal in the bond market. So could you explain why it is so important and what makes it such a key benchmark?
Yeah, so in many cases, the 10-year Treasury note is a bellwether for risk-free long-term interest rates in the US. And a standard comparison point for example, relative yields compared to corporate bonds as an example, or even mortgage loans for that example, right? There's in corporate bonds, they very frequently benchmark a corporate bond to the 10-year Treasury, and they say, hey, what's the 10-year Treasury spread? So they can get a sense of how far away yields are for those corporate bonds relative to the 10-year Treasury note. The point of comparison extends around the world, right? As the interest rates of other countries are judged against the 10-year Treasury yield to ascertain whether they are relatively low or high compared to the US market.
Okay, so as you mentioned, the 10-year Treasury serves as a key benchmark for many other rates. So given that, what's actually driving the interest of the investors in the 10-year right now? Like what market dynamics are shaping this attention, do you think?
Yeah, so the world markets, especially at this point in time where we stand, they're experiencing quite a bit of turbulence, right? There's trade negotiations taking place right now, and there's armed conflicts that have happened, especially out in the Middle East. And all of these instances can create a dramatic impact on the future economic growth and inflation numbers, right? The value of the 10-year Treasury reflects the outlook of interest rates over time, and the yields reflect the present value of future cash payments. So the 10-year Treasury yield incorporates the market's view on long-term impact of events unfolding with the current news headlines.
So it sounds like the 10-year Treasury isn't just sweet spots in terms of the duration, but also quite practical for investors. So it is often described as the most liquid and actively traded government bond in the world. Why is that?
So as previously mentioned, the 10-year Treasury is a key bellwether for interest rates and such. It's in focus for trading of many strategies, incorporating views on long-term interest. So, even if you look at some of the liquidity data that we have at ICE, the data itself shows that bonds that get included in between 7 and 10 years in the index roughly trade about 3.5 times more frequently than some of the other maturity bands. And obviously, the bond that trades the most by comparison is the on-the-run 10-year Treasury.
So I mean, given that I assume the 10-year segment plays also a key role in institutional portfolios as well, like, is that correct?
Yeah, that's right. And it's for reasons that we've touched on, right? The 7 to 10 year area gives you exposure to the long end of the yield curve, where debt is liquid and rates are sensitive to changing outlooks without being excessive duration. This complements the portfolio allocation by allowing the exposure to be tapped into in conjunction with short and ultra short exposures. Now, on the flip side, if you look at the 30-year Treasury, you can get a significant amount of duration noise because of the sensitivities sensitivities on rates, otherwise known as DVO.
Yes, I mean, actually in Korea, we have actually seen a very, very strong demand for the 30-year US Treasury bond in the retail market right now. So how is the 10-year Treasury could be different from those longer date bonds, as you mentioned, 30-year bond? Like, how would this duration be more appealing to the current environment, do you think?
Yeah, that's right. So the 10-year is typically viewed as just not just a key indicator of interest rates, but also in many ways the driver, right? It is long enough to reflect current and evolving long-term views on interest rates, yet short enough to more sensitively reflect the perceived impact of daily news events. 30-year, on the other hand, is slightly more stable from a rate perspective, so the yields themselves don't fluctuate too much. However, when you look at it from a price perspective or duration, the 30-year has a lot more sensitivity to it. Now, if you take a look at the 10-year Treasury, a duration on a 10-year Treasury is roughly about 7 years, and a duration on 30-year Treasury is roughly about 16 years, right? So twice as sensitive to the same change in rates between the 10 and the 30-year.
So I think we covered why 10-year is important in terms of portfolio and why it's getting a lot of attention. So far, we've talked about those kind of things, but now I kind of would like to dive into a little bit deeper in the index side. So, but before, I'd like to bring up that many retail clients here, they ask me, you say it's a 10-year bond, but the duration itself is ranging from 7 to 10, right? So could you explain why that range was chosen and how the ICE US Treasury 7 to 10-year bond index is constructed?
Yeah, sure. So the index is a rules-based, transparent index. It includes all US Treasury notes and bonds between 7 and 10 years to maturity that have at least 300 million in outstanding, right? So when we have a rules-based index, if you make the maturity bands too tight, then you don't have that many bonds that meet the inclusion criteria. And as a result, in order to have a nice balance of the number of bonds that go into the index, we'd have to widen it out to a certain extent. Now, furthermore, we also exclude the amounts that are held with the Federal Reserve's SOMA, right? So the way we perceive that is, since it's held by the Fed, it's not really available to trade. And as a result, for secondary market participants to get exposure to the index, to take that into consideration, we'd have to take those bonds out of this index. Now, the index is rebalanced every month, at which point qualifying securities, so as securities that are rolling down the curve and securities that are exiting the index can be reselected. And any cash that is accumulated as a form of coupon is again reinvested back into some of the newer bonds that are making it into the index. But similar to some of the other indices that we produce, performance and statistics of the index are calculated and published on a daily basis.
Okay, so because it has a duration, when the duration kind of shorts down and it's no longer goes into that 7 to 10 year, it's going to be excluded, and then the renewed one will be included. So that's kind of logic, simple logic, very simple logic. So, I mean, beyond indexes, I heard that ICE is also playing a growing role in treasury infrastructure. So could you tell us more about ICE's clearing service?
Sure. All right. So, to take a step back, all this stems from a significant shift in regulations. The Securities and Exchange Commission, the SEC here in the US, has mandated the use of central counterparties or CCPs. in the Treasury market. The goal is to really enhance the market stability and transparency and risk management, right? ICE currently already operates some of the world's largest clearing houses, decades of experience across a wide range of asset classes, including interest rates, energy, agriculture, equity derivatives, and credit derivatives as well. Now, what we're really doing here is we're leveraging the expertise that we have in central clearing and our fixed income data to launch a dedicated clearing service for US Treasury securities and repurchase agreements, or otherwise known as repos. The new service is going to be offered through ICE Clear Credit, which is our CFTC and SEC registered clearinghouse, with the leading global CCPs for credit default swaps. While we're leveraging ICE Clear Credit's infrastructure, the Treasury clearing service will operate under its own rulebook, membership structure, and risk framework, all tailored specifically to meet the Treasury markets.
Oh, so why is clearing for US Treasury and repos is an important development for the investor and the market participants?
So clearing for US Treasuries and repos is a major development for investors and participants because it's fundamentally enhancing the efficiency, transparency, and resilience of one of the world's most critical financial benchmarks, right? Central clearing plays a vital role by reducing counterparty risk, providing centralized reporting and oversight, and streamlines post-trade processes. This is a significant change in the US Treasury market infrastructure. And at ICE, we're committed to supporting market participants every step of the way as they navigate through an evolving regulatory landscape.
Great. So, I think we covered a lot, not a lot. I actually have like 10 more questions to go, but due to our limited time, so thank you. But to close, would you like to have any last comments or maybe summarize what we have just discussed?
Yeah, absolutely. At ICE, we have a very large, dedicated team of individuals who are very focused on building indices, both on the equity side and on the fixed income side. To touch a little bit upon what we've built here, which is essentially the ICE US Treasury 7 to 10 year index. What I would really like to highlight to investors is the index itself is very transparent. We actually publish the list of constituents almost on a daily basis. We are a rules-based index that tracks performance of US dollar denominated sovereign debt that's available publicly. And with the monthly rebalancing, the index maintains up-to-date exposure reflecting actual availability and weight of securities in the market. As such, it serves as a proxy for a liquid bellwether point of the US yield curve.
지금까지 아이스 전문가와 함께 미국 10년물 국채 의미와 이를 추종하는 인덱스에 대해서 좀 깊이 있는 이야기를 나눠봤어요. ACE ETF는 30년 국채 상품을 국내 투자자분들한테 이제 소개를 먼저 해드렸었죠. 이제는 투자자분들이 기다리시던 10년물 ETF까지 준비를 하게 되었습니다. 10년, 30년, 달러, 엔화 단기 하이힐드까지 미국 채권 투자의 진짜 완성은 이제 ACE와 함께 해주시길 바랍니다. 지금까지 ACE ETF 염정인이었습니다. 감사합니다.
ACE ETF